investor rules. It's either they're making 200,000 or they have a net worth
Over a
of
million.
over a million. So they're carving out a portion, and they will say, I'll contribute 100,000 a year for 5 years to make sure we're compliant. Taxes work well when I pull the money out. That's kind of what we say. So if someone had 100,000 and they want to re-diversify their assets, again, I don't think it makes sense for the insurance. You'd open up a bank account somewhere, wherever. Again, you can't do Switzerland anymore. They're not going to take U.S. clients, as we're well aware. So they would maybe go, Caymans, Belize, wherever, that kind of thing. That would be step one.
So they fund it with $100,000 a year for 5 years, and then what happens?
And normally it would be assets. So again, they can use any asset they own. We've got clients that have collectibles in the policies, as an example. So then, it's a life insurance policy. There's a death benefit based on their age that would pay to their heirs. And most of our clients are not interested in the death benefit, but you have to have the death benefit to get the tax deferred wrapper of the asset that's inside to grow tax free. So we usually will structure it where we try to buy the minimum amount of death benefit that we can, thus the lowest mortality expenses that what Gen Re is going to charge, right? They've got it based on how old you are. And of course, you got to get a medical, and all the same things apply, but everything has to occur offshore. So medicals, financial information, there's financial justification, all those various things. They want to look at tax returns, those kinds of things, make sure that it's financially justified. So then you have a policy that's in place, and after 5 years, they can do what they want with it. I mean, they can borrow money out if they want, or assets out, tax-free, or just leave the policy in force. It kind of depends. But each of the goals are going to be different, as you know.
Right. And what kind of return on investment can they expect?
Whatever their investments are, that's what they're picking. We're not picking. We don't do anything with the investments. So
okay. So with the investment, it's just either cash or shares in an LLC or whatever, as you mentioned before. But what if they just come to you and say, I want to put in 100,000 a year? What happens then? They just maybe leave it in a foreign currency bank account?
Yeah, good question. I mean, I guess there's two things. The first is for any offshore policy to make sure that it's IRS compliant, the individual must have 5 asset classes. Okay, so you can't just say, I'm going to just stick 100,000 of cash in. It has to be broken up in the way the IRS, the rule, and I'll go through it quickly. You can have no more than 55% in one asset class, no more than 70% in 2 asset classes, no more than 80 in 3, no more than 90% in 4. So the minimum you got to have is 5. Maximum, and you can go, of course, more than that. That's to pass the diversification test by the IRS. If you don't, all the growth is taxable. So it's absolutely imperative that you have 5 asset classes. But the first part of your question was, what happens if a client has 100,000? Well, the other component of the IRS is you have to have an investment advisor, trustee, individual other than you appointed. You cannot trade in the account. It's not like owning a brokerage account. And those investments, we can help someone and guide them to some people they could talk to, but we do not make the investment decisions. It's ultimately up to them and their advisor when they set it up.
All right, good. What else should people know about this?
I guess a couple things. One is there are some requirements that are important to file. With all the new disclosure rules, it falls under all the new disclosure, the TD90, the 8635, the new form. I don't know if I have the number right, but the new one that came out. In addition, there is a Form 720 that is required. And when I talk to accountants, I tell them, make sure you have your client fill out the forms. And the compliance is important to disclose it. Just like anything else that you have offshore. There's no attack on anything other than you just need to disclose. The other thing would be if a client or an individual is looking at it, analyze what the overall costs are. It's like anything else. What's the mortality expense charges that they're charging? What is the cost for the implementation, the sales load? It's, in most cases, it can be less expensive than buying domestically because you save about 3% with not paying state premium tax that you have in the United States. So and that's on the premiums. You eliminate that. You pay 1% excise tax, so you're probably ahead a couple points. And then you figure out determine what the loads are. And the loads are not like in the U.S. And I'm sure Jason, I mean, the average commission rate for an insurance premium to the agent in the United States is, 50% minimum up to 90%. I mean, they're
that is just insane. Do you want to just elaborate that on that for a moment? So an agent, no wonder they like selling life insurance, right? So, and we've done shows on this before because it's just mind-boggling to me.
Oh yeah.
But no one really knows how much the agent is getting, and you said 50 to 90%.
Yeah, I'll give you an example. If it's a term policy, temporary coverage, not a permanent.
They don't make much money on those, right?
No, they actually make a lot more. Normally,
it's
between 90 and 103% of the premium is commission. Okay. So, and then a more permanent product, the minimum threshold would be about 50%, up to, 70, 80, 90%, depending upon bonuses of the first year premium. Then they receive a renewal going forward, depending upon how it was structured. When you go offshore, the highest I have ever seen is 5%. You're talking probably in the 2 to 4% range is the total load on any offshore carrier. They'll all be like that. So it's a very, very different model than onshore. So, the insurance agents, generally, and most of the people that work in this space are investment people because they understand they charge a client a percentage of their assets, right, as a management fee. It's the same thing with an offshore life insurance. It's like assets under management because they're normally running the money that's inside an offshore policy. The reverse is in the U.S. I mean, an insurance agent in the United States would probably not be real enamored to make 2% commission on a new policy. They're going to be able to get something, but at 50% or whatever. Big difference from that side.
Yeah, pretty amazing. One more question for you. You're in the same building as KeyBank, and I actually opened an account there, never funded it, but I did open an account about a year and a half ago. And I was just wondering, I went there and, I just honestly didn't feel that comfortable. I know this is the bank a lot of Americans use when they do the offshore banking. I've heard about it. I've read about it. But it seemed like such a little sort of small kind of Mickey Mouse operation, frankly. And they have no FDIC insurance. They did say, though, in counter to that question, is that they have much higher reserve requirements than U.S. banks. Well, I would believe that. I mean, the whole U.S. banking system is a house of cards, really.
You're right. Yeah, it's about I think it's 25% or 30% threshold is what the reserve requirements there versus the U.S. I don't know what it is. Right now, I think the banks are at about 6%. So it's a big difference from there. But maybe to answer your question on comfort level, I think the one thing that I always mention is when I talk to a client, again, I'm not on the banking side. That's not my space.
I understand.
But it's important that if you look at we'll just take the country of Belize as an example. There's several banks, but you're not going to find billion-dollar banks. It's a very different model, and it's a small little country. It's like various other places that you can go as well. That's kind of the mentality that you'll find in Central America from the banking jurisdictions, things of that nature. But that's kind of the norm. I mean, that's what I've seen when I've gone to some of the different banks in the various places through Central America. You're not going to see an infrastructure with, remember, none of the clients are, for a lot of the international banks, will be locals. In a lot of cases, they're just banks that will deal with Canadians, U.S., Europeans that you have to live and reside and be a citizen outside of the country. Again, you're not having tellers and a very different kind of model than walking into a Bank of America building or something. But you address great points. I mean, and I think everyone should do their own due diligence with management, looking at the balance sheet, seeing where the debt is. I mean, are they lending money on real estate, things of that nature? What does the reserve requirement look like? And you got to realize, when you go offshore, if it's a $50 million bank, $100 million bank, that's big in the Central American region. Not saying Switzerland, but we take Central America, all that kind of corridor.
Yeah, it's just, Belize, I went there last year. I thought it was beautiful snorkeling and so forth and diving, but I just thought it was such a primitive country. I mean, if you want to just get out of the rat race and be away from it all, I guess it's great. That's not my kind of thing. But the whole country is it's very primitive. There's not much of an economy there. They've got hardwoods. They've got some drug smugglers coming up through Mexico, or into Mexico, I guess, from South America. That's an economy. But I don't know. Am I just missing something? Maybe I'm just being too much of a pessimist about it. Other people seem to like it. I just didn't get it, to tell you the truth.
It's a good point. point, Jason. The thing that's been kind of amazing
You
to
like
me.
how I point out the drug smuggler economy?
No, I know. Well, again, as I tell everyone, you don't go to Belize. You're not going to Belize City. Most people come, they go to the islands, they go to Placentia, they go to the various areas within Belize. But, one thing about Belize right now, of course, they're playing no question, the end of the Mayan calendar. Tourism is through the roof. The Bachelor, all the TV shows, they've all been filming there and all the various things. The thing that's been surprising is the vast amount of people that you will see on the various islands that come from throughout the world, not just the United States and Canada, to go to Belize. I mean, it is a very, very unique place. It's very different. It's very different than the Caymans. It's very different than Bermuda. It's very different than Nicaragua, Panama. You pick them all. It is very unique. I tell everyone, it's kind of a combination of a little bit of Jimmy Buffett, kind of Key West look to it on the islands, as an example. And there's been a fair amount of investment. I mean, if you go through